how many people can identify with this issue? You open up a chart, you put a ton of indicators on it, they're all pointing in exactly the opposite direction, and you have absolutely no idea where things are going. Yep. This is normal. I've had this very same issue, and most new traders have this very same issue. And so I put together this class for the first time, actually, at these expos this year, because I actually have stripped down my technical analysis to use almost no indicators whatsoever. Because I think that doing this simply is better and more powerful. So before we get going here, I do want to remind you guys again about this now very familiar risk disclaimer, I'm sure, which says that, of course, currency trading is a risky thing, which uses a lot of leverage, which can be a good or a bad thing and can amplify losses just as well as gains. And if you are uncertain at all about whether this is right for you, although you should, of course, only be trading this with risk capital that you can afford to lose, you should certainly seek the advice of a professional to see how this fits into your overall investment objectives. So the first thing we'll do here is we'll look at what is technical analysis, why we even care about technical analysis. We'll look at some classic chart patterns. Some of the things that have been used for decades in any market. Then we'll look at my absolute personal favorite, Japanese candlestick analysis, and we'll look at some of the patterns that I actually use and what I've found to be useful. And then we'll talk a little bit about the one and only component of this presentation that will involve any kind of indicator: divergence. So what is the aim of technical analysis? We were discussing here with some of our guests before the presentation that human behavior is repetitive, that humans are creatures of habit, and that they have a mind that seeks to find patterns where there may not be any, and to make order out of chaos. And so by looking at how people have behaved in the past, what we try to do is, hopefully, get an understanding, mind you, not a prediction, but an understanding of what they are likely to do in the future. And the problem I described earlier is what is known in the markets as paralysis by analysis, where you've overanalyzed something to such a degree that you have absolutely no idea where it's going. And you have a million indicators pointing in opposite directions, and they are telling you nothing from a practical perspective. And that's exactly the problem that hopefully we can start to undo. With the most basic indicator, if you will, of all, the trend line. Now, my theory on technical analysis, simply put, is that a lot of technical analysis is self-fulfillment. And so, if people believe that a trend line is going to mark support and act on it, sure enough, that's support. Whether that trend line had any sort of magical powers or not is irrelevant, because if everybody believes that to be support, and is buying and selling on the assumption that it is, then it is support. And so the most important thing I have found in drawing trend lines is making them look pretty. Because chances are, if they're pretty, lots and lots of people see exactly the same thing and are acting on it. Because if something is apparent, if something screams at you from the chart, it's screaming at a whole lot of people besides you. Which means it is that much more powerful because of self-fulfillment. One step up from a trend line is a channel, which is just two parallel trend lines. And the same logic here applies. Okay? If it looks good, it's probably more powerful than if it doesn't. And generally what I like to do to establish a channel, but if you see here, 1, 2, 3 points. 1, 2, 3 points. I generally look for the line to be connected by at least 3 points to verify that it's valid, that there's something there. You know, you can connect any 2 points together and make a line, but that doesn't really tell you a whole lot about whether something will bounce there again or not. And so when I draw these trend lines and channels, I like to make sure that there's at least 3 points that are connected to sort of confirm for me that people are actually seeing something. Next, the wedge. Now, although it is pointing down, that is a bullish setup. Because what you see here is bullish momentum is contracting. The strength of those swings is diminishing. And so, just intuitively, if you think about what that chart is telling you, if you get into the mind, the collective mind of investors, it's telling you the conviction behind this is starting to go away. Okay? Now, very importantly, you have to have a trend in order for that trend to be reversed. So for this pattern, which is called a falling wedge, or the opposite of this, which would be a rising wedge, you do have to have an actual trend in place. So if the market is going down and you see this, that would indicate that perhaps a reversal is coming, although obviously you would always want to wait for confirmation on an actual breakout of that wedge. Now, one word of caution here. These lines are contracting. Eventually it will break out anyway, because eventually those lines will meet and prices will just trade out of the triangle. So you do want to see a breakout with perhaps some space here. And usually, if you kind of eyeball that wedge and visually dissect it into quarters, you kind of want to have a quarter of this space left blank before those two lines meet. Because invariably, if it just trades through it as the lines cross, that's not necessarily a breakout, right? That's just a function of geometry, and that doesn't tell us a whole lot. That is a triangle. And although it looks kind of like a wedge, while a wedge is obviously, as we just said, a reversal, this is a continuation pattern, usually. And I say usually because it is not always a continuation pattern. It has marked reversals before. I've seen it. And that's why you do want to wait for this breakout to actually happen. Okay? You'll notice, by the way, that's a chart of crude oil. The previous chart was dollar yen. The previous chart was dollar Swiss. And what I'm trying to show you guys here is these hold across markets. They're a bit more powerful in FX, though, in my opinion, because FX is a 24-hour market. You have a lot more price points. And as with any kind of statistical analysis, the bigger your sample space, the better your analysis. Now, my favorite technical analysis technique, candlesticks. This is a brief slide. I'm sure you guys at this point know how to read candlesticks, yeah? Okay. Now, the reason I like candlesticks is because candlesticks are exactly what an indicator is not. They are not any sort of magical formula. They are not an algorithm. They are the price action itself. They are the purest gauge of market mood, because nothing is a more direct reflection of how the market feels than the price itself. And candlesticks are just a convenient way to visualize it and look at it. Now, there's basically two types of candlestick patterns: reversal and continuation. Continuation patterns are generally tougher to spot, and they're not as powerful. I pay relatively little attention to continuation patterns. But reversal patterns are something I use every single day, day in, day out. And what I want to do here is just go through, because there's a multitude of them, and they all have very nice and colorful names, because they come from medieval Japan, where they were used to trade rice. So I just want to go through a couple that I seem to find all the time, and that I seem to see as the most powerful. This right here is the morning star, or the evening star. It's actually the same pattern. One is bullish, one is bearish. And this pattern begins with the continuation of a dominant move. Obviously, in the bullish case, it is a dominant bull move. If it's a reversal to the downside, if it's a reversal to the upside, then of course it begins with a continuation of a dominant bear move. And then what you see after that big push in the direction of the trend is stalling. So on the second day here, you see a pattern that all of a sudden shows you momentum being lost. Now that can be seen, of course, by a candle with a relatively small body. Right? Now, take yourself into the mind of the market here for just a second, and visualize the push and pull, right, between the bullish side of the market and the bearish side of the market. And think, what does a candlestick like this show you? It opened here, it went all the way up there, and if it closed up there, it would have been a big bullish bar, right? But then it got slammed all the way back down and closed very close to where it opened, right? Does that scream bullish conviction? No, right? That means the bulls attempted to take this thing pretty high and got smacked right back down. Right? That begins to warn you that that tug of war between the bulls and the bears is starting to get a whole lot of bearish sentiment becoming extremely powerful. Now, that may or may not mean something, because perhaps the trend will just resume the following day. And so what you wait for is a third day of confirmation to show you that indeed the balance of power here has shifted. And typically the way you look for this confirmation to see if this thing is valid is you wait for this candle to close below the midpoint of that candle. So if you at least erase half of this first big bullish day, that gives you a valid reversal signal. Now, this candle here, I just want to note, does not have to look like this. It can be a doji, for example, right? Which is a candle that opens and closes at the same rate. All you're looking for is visual evaporation of conviction. Right? What you want to see is bullish momentum dying. That can be a small real body. If it's a small real body with long wicks, especially one long wick in the direction of the trend, that tells you that much more, right? Because if it just went nowhere, maybe that's indecision. But if it tried to rally and failed, that's more like capitulation. So you definitely want to, rather than getting stuck in the definitions here and looking at this and saying, okay, I'm going to find exactly that pattern, exactly those three candles. Think of the actual push and pull in market mood behind this. Because ultimately, whether it's called an evening star or a morning star or an afternoon crescent doesn't matter. What matters is what this tells you about what the bulls and the bears are feeling and what their balance of power is. But again, don't get stuck in these definitions. Okay? The definitions are not what's important. What's important is, what is this telling you? Right? What is this telling you about the mood of the market? Okay? The other pattern that I like to look for all the time is engulfings. And engulfings, if you think about the logic of an engulfing and what the engulfing signifies, you have, again, a move in favor of a dominant trend, okay? As with any reversal, you have to have that dominant trend. If there is no dominant trend, there's nothing to reverse. And so you have this move, and on the following day, the price not only sets a new low, right? So the sellers actually attempt to push this lower. Price sets a new low, and there is such complete capitulation on the side of the bears that not only does the market reverse, it actually sets a new high. So what this tells you is the bears attempted to keep selling, then somewhere they completely folded, and the market not only erased that initial selling, it reversed completely in the opposite direction and actually set another high. that tells you that the balance of power here has perhaps shifted dramatically. And of course, that would be the bullish or the bearish version of that, okay? Where the dominant trend is higher and the reversal is lower. Now, there's some competing definitions in terms of, does it have to engulf the full real body, or does it have to engulf the full range from high to low? And obviously, generally speaking, if it engulfs more, that's better. If it engulfs the full range from high to low, it's that much more powerful. If it engulfs just the real body, it's still telling, though. Because again, you don't want to get stuck in defining these things. What you want to do is be able to look at candlesticks and see behind them what they show you about investors' mood. That's what's key here. Now, this is a variant on the bearish engulfing, which doesn't quite engulf. In the bullish version, it's called a piercing line. In the bearish version, it's called a dark cloud cover. And it doesn't quite engulf. So as you see here, okay, what you have here is the candle erases most of the previous day's bull run, but not all of it, right? Doesn't fully engulf. What you look here is, again, for it to erase at least half, or at least more than half. You're looking for it to close below, again, the midpoint of this range. But again, the logic is, if you get that magnitude of a reversal, perhaps something material has happened in the balance of power here. And some people look for another day of confirmation, some people don't. I find this to be a pretty powerful setup generally. Obviously, an engulfing is more powerful, but it's a pretty solid setup, at least in my sort of use of it. Now, taking a look at continuation patterns, you'll see immediately how this can be a difficult thing to read. Because when you see 3 candles in a direction and then a sharp reversal, very tough to feel that that is not a reversal. And oftentimes, if I saw something like this, I would perhaps think that it's a reversal. But this exact setup has oftentimes actually shown up as continuation, to where this was a dominant trend, this was a retracement, and the trend continues. And again, this is why I mentioned earlier that I don't particularly like continuation patterns, and that I don't put a whole lot of stock in them, because they are very difficult to distinguish. And they can require a lot of confirmation. I mean, for me to say that this is a continuation pattern, I would need price to come all the way back up here and close above that top to confirm that indeed there was a continuation. But again, this is why I say that its reliability is moderate. Because it is confusing, and it can be difficult to distinguish. But it's important to be aware that not all candlestick patterns that look like reversals are indeed reversals. That there are, in fact, things that look like reversals which have consistently shown up as continuation setups. Not all the time, but often enough to notice. Now, I promised a word about divergence, and I promised to show at least one indicator. So, this is that one indicator. This is basic 14-period RSI. Now, if you don't like RSI, you can use any oscillator you like. Now, basic 14-period RSI, okay? If you don't like RSI, as I was mentioning before, you can use any oscillator, okay? MACD works just as well. Stochastics works just as well, because ultimately you're not looking for the indicator to actually indicate anything. What you're looking for is a divergence in what the indicator is showing you versus what the price action is showing you, right? Because what is an indicator? An indicator is just a derivative of the price action. Somebody taking the price, plugging it into a mathematical formula, and getting some outcome. And that's the value of the indicator, okay? That's why, for example, if you look at the moves here, right, you can see very similar, right? Generally. The indicators kind of look like the price itself. And so what you want to look for here when I say divergence, you want to look for price to be doing one thing and the indicator doing another. And what you look at is extremes. So if you see the price setting new lows, but the indicator is not, what that tells you is perhaps the conviction behind this low is diminished. And perhaps there is a reversal that is coming, which, as you see here, clearly worked out. And so again, as with any technical analysis, as with any pattern, as with any chart setup, trend line, whatever it is, the prettier it looks, the powerful it is, generally speaking. Okay. We'll call that a session then. Thank you, everybody. Thank you.